Portfolio weighting is an important consideration for any investor, old or new, as it allows you to be diversified across a number of different equities within the market. The idea with investing is to not put all of your eggs into one basket, because this exposes you to excess risk within the market. This means that if a particular geographical region or sector struggles within the market, it will only be that portion of your portfolio that is affected and perhaps has stunted growth, not the whole portfolio. I started investing later than perhaps I should have, and when I was 27 I opened my first investing account, and this was my Vanguard ISA. On opening my Vanguard portfolio, I initially started to invest in 100% equities, and I used Vanguard's Lifestrategy suite of funds to do this. My first investment was within Vanguard's Lifestrategy 100 fund, and I initially invested £500 in May of 2019. I saw Vanguard's Lifestrategy suite as an excellent way for me to begin investing when I had little to no knowledge. Obviously, I'd done plenty of research into the Vanguard platform and into the products before I invested my hard-earned cash. However, I didn't understand as much as I do now about the intricacies of investing. So for me, the Lifestrategy 100 fund gave me an excellent range of diversification across the global markets at a very competitive ongoing charges figure, and by investing into just one product. So it was really simple for me to get started and get my foot on the ladder. As I looked into investing more, I came across Vanguard's suite of ETF funds, and it got me thinking, could I make my own bespoke portfolio using just these funds to have a cheaper ongoing charges figure than what I was currently invested in, the Lifestrategy 100? Now, Vanguard's FTSE All-World ETF seemed pretty good to start with. It gave excellent diversification across the full world market. However, it still had an ongoing charges figure of 0.22%, which was exactly the same as the Lifestrategy 100 that I was currently invested in. So I challenged myself to try to beat this, to try and create my own portfolio of Vanguard ETFs coming in with an ongoing charges figure of below 0.22%. So today I'm going to share with you just that. I'm going to share with you my target weighting of each of the 6 ETFs that I'm invested in within my Vanguard ISA. I'm going to show you the overall weighting I've decided on for each of the 6 exchange traded funds. I'm going to show you the overall ongoing charges figure for the portfolio as proposed, and I'm also going to show you the amount of dividend percentage return that I can expect to see via investing through these 6 funds for the long term. This obviously assumes that the dividend yield will not change drastically, so I'm making a small assumption there, but just bear with me. Before I start though, please remember this is not financial advice. I am not a financial professional, I'm not a financial advisor, I'm just some guy on the internet sharing my investing journey and talking about something that I really enjoy. So while this strategy will work for me, and it has been working well for me over the last 2 years, it may not work for you. So please make sure to do your own research and make sure you're fully confident in anything you decide to do with your money before you do it. The first thing I did was look at a Vanguard ETF which already held the entire market, and this is the Vanguard FTSE All-World ETF. So through the Vanguard Exchange Traded Funds page, it is located under the geographical or global funds. As you can see here, the FTSE All-World ETF. Now, first of all, as I've already said, you can see it's got an ongoing charges figure of 0.22%. It's clearly 100% weighted toward equities, and it does have a current risk percentage or a risk factor of 5 out of 7 on the Vanguard scale. I wanted to know what this FTSE All-World ETF was comprised of and exactly the weightings to the different geographical regions, because this is what I was going to use to try and scale my own portfolio on. So I had a look at the All-World ETF, and the first thing I noticed was the amount of stocks that it held. It currently holds, at time of filming, 3,758 stocks. So this is massively diversified across the whole world's market. If we go across to the portfolio data, we can see the breakdown of exposure to different geographical regions within this fund, the VWRL. And you can see that it is highly biased towards the North American markets, with 60.6% of the makeup coming from North America. We've got 16.9% from Europe, 11.7% from the Pacific region. Emerging markets is 10.6%. with the Middle East at 0.2%. So you can see there the geographical diversification of this fund, the one that I was trying to emulate, albeit for a lower ongoing charges figure when compared to the 0.22% that FTSE's All-World ETF currently charges. We can then break this down even further to look at exactly how my money would have been distributed. And you can see that the United States would have got around 58% of my money, Japan around 7%, China and UK around 4% each, and then the rest of them as we go down through the different countries within this market. Vanguard's FTSE All-World ETF also pays a dividend, which shouldn't be forgotten. At the moment, the dividend yield sits at just 1.44%, and we'll remember that for a little later. After fully understanding Vanguard's FTSE All-World ETF, I had a look at the individual geographical ETFs within the Vanguard platform to see exactly what they could offer me. And it quickly became apparent that I was going to go for a 6-fund ETF portfolio to try and emulate Vanguard's All-World ETF. The funds I decided to have in my portfolio then were Vanguard's S&P 500, the Emerging Market Fund, Vanguard's Asia Pacific ex-Japan, Japan's ETF, the UK ETF, so the FTSE 100, and Vanguard's Europe ex-UK ETF. Now, I could have done this using just 4 ETFs, and I could have gone for Asia Pacific and Japan as a collective ETF, and also Europe with the UK included. However, I wanted to have total control over exactly what I allocated to each of the markets, and the Japanese and the UK market are markets that I'm really interested in. So I thought it would be best to have bespoke ETFs to track those 2 individual markets, so I could slightly change the allocation to each of those areas when compared to Vanguard's All-World ETF. From just eyeballing the data at that point, it was clear that I was going to be able to undercut Vanguard's All-World's ETF, OCF. The amount I was going to be able to undercut this by obviously depends on the weighting which I proportion to each of the ETFs, because they all individually have different OCFs themselves. As I've already mentioned, the VWRL, Vanguard's FTSE All-World ETF, has an exposure to the American markets or North America of around 61%. Now, after consideration, this was too high for me. Whilst the American market is the gold standard within the stock market when we talk about growth and return rates, I didn't feel, or now don't feel comfortable having that much exposure to the American markets. And I decided that 50% of my overall portfolio was a more viable amount that I would feel more comfortable with putting into just the one market. And the fund that I decided here was the S&P 500, as I've already said. So the weighting towards the S&P 500 within my Vanguard portfolio, I'm targeting around 50%. Equally, if you look at the European allocation within the VWRL, it's currently sat at around 17%. And there's 2 ETFs that I'm obviously allocating towards for the European markets, the Europe ex-UK and the UK's FTSE 100 ETF. Now, because I am UK based, I've got a slight bias towards the UK markets. As we said, the VWRL has just 4% of its money allocated towards the United Kingdom. I personally am going to allocate 10% of my overall portfolio to the FTSE 100. Partly because of home bias and partly because of the dividend that this continues to pay every single quarter. And this outpaces any other dividend that I can see from the 6 funds that I'm investing in. I'm also going to allocate 12% of my money to the Europe ex-UK ETF. And this gives me an overall European allocation of around 22%, up 5% from the 17% of the VWRL. And as I've said, this is largely because of my slight home UK bias and the dividend that will see me. So I've taken a little bit from the American markets and given a little bit more to the European and the UK markets. I also decided to increase the allocation towards the emerging markets. Now, they've not seen the best last few months. However, I strongly believe that over the next 20 to 25 years, the emerging markets will be where a lot of money is made within the investing space. Places like India, China are growing every single day. They're spending more, they're buying more, and people are becoming more and more wealthy within those countries. and I hope that that will stimulate lots and lots of growth within those areas. So I've decided to allocate 15% of my portfolio towards the emerging markets alone, and that is up from around 11% if you combine the emerging markets and the Middle East in the VWRL. Overall then, my target allocation breaks down as so. I'm going to put 50% of my money into Vanguard's S&P 500 ETF. I'm going to put 10% of my money into Vanguard's UK FTSE 100 ETF. I'm going to put 12% of my money into Vanguard's Europe ex-UK ETF. I'm going to put 15% of my money into Vanguard's FTSE Emerging Markets ETF. I'm going to put 8% of my money into Vanguard's Japan ETF. And finally, I'm going to put 5% of my money into Vanguard's Asia Pacific ex-Japan ETF. But did I manage to do it? Did I manage to beat the ongoing charges figure of Vanguard's All-World ETF, which sat at 0.22%? Well, you'll be pleased to know, yes, I did. All of this over here comes to a total ongoing charges figure when accounting for the different weightings of each ETF of just 0.11%. So I'm halving my ongoing charges figure just by making my own bespoke portfolio. Additionally, when considering dividend yield, once I've hit my target allocation of each of these ETFs, I will see a dividend yield of 1.79% per year. If you remember back to the beginning of the video, I said that the dividend yield from the VWRL, the market we were trying to beat, was just 1.44%. This means that by creating my own portfolio with my own bespoke allocation, not only am I reducing the OCF from 0.22% to 0.11%, I'm also increasing my dividend from 1.44% to 1.79%, an increase of 0.35% dividend yield per year. As soon as I realised this, I wanted to make sure that I began to invest in my own bespoke portfolio as soon as possible. And whilst I do want to get there quickly, what I don't want to do is lump sum invest into the different ETFs, buying in at perhaps not the best price throughout a short period of time. So I'm going to try and get there over the next few months and into the next year. And this is going to be something that I'm going to have to watch really, really closely and make sure that I invest the right amounts into each of the ETFs to increase the allocations within some areas and to therefore slowly decrease allocations in certain other areas. And there we have a breakdown of what I'm proposing to do with my Vanguard portfolio, my own bespoke basket of funds. Much, much cheaper than the Lifestrategy, much, much cheaper than the VWRL, and it sees a greater dividend than that as well. And all it means is that I have to spend a little bit of time calculating how much I'm investing in each area rather than just investing into one fund every single month. It gives me a bit of ownership over my investments, and it actually makes the whole process of long-term investing a lot more enjoyable for me. You can also buy all of the ETFs that I've discussed today on Trading 212 and on Free Trade. So if you want to start investing through either of those platforms, I've got links down in the description below, and you will be able to save yourself the Vanguard platform fee. So Vanguard charge a fee of 0.15% on top of the ongoing charges figure. So you can actually invest in the portfolio for even cheaper than I am at the moment, just by using one of those two platforms I've linked down below. So what do you think of my portfolio? Do you think I'm going about it right? Do you think I've made any glaring errors? Please let me know down in the comments below exactly what you think of my 6-fund Vanguard portfolio, and tell me if you're doing something similar as well. With that said though guys, I really hope you've enjoyed this video, having a more detailed look at where I see my portfolio going over the next few years. And with that said, I'll catch you in the next one.